First off, what are you closely monitoring?
Well, we're looking at the Aussie today, and I think that this rate decision is important in that the market has rate cuts priced in for the RBA moving forward, but I think that's unrealistic. We would look for the RBA to keep rates on hold, to issue a relatively neutral statement, and I think that will read hawkish relative to what's in the market and has the potential to lend Aussie some support.
To lend Aussie some support. Okay. So again, I didn't hear you. What did you say about the RBA? What are you going to do today? What are you expecting? All the comments that we surveyed expecting them to stay on hold.
Yeah, exactly. Citi expects them to remain on hold as well, and we expect a neutral statement. But I do think that that reads hawkish relative to what's discounted in the money market, and we would look for Aussie outperformance on that factor if we do see a rise in interest rate expectations. And I think that the risk is that Aussie is somewhat more sensitive to any hawkish rhetoric than has been the case in the past, because positioning is less long Aussie than has been the case coming into previous RBA meetings.
Okay, so are you saying to buy on these dips in the Australian dollar in anticipation of higher levels in the future?
Certainly, we like buying the dip in Aussie, and I think that tactically short Euro Aussie is an attractive trade.
Well, yeah, let's talk about the euro. That's interesting because the euro weakened against the dollar, against the yen, against the Swiss franc after that election loss in Germany, and people are concerned that Italy might be the next nation to need a default. What's Citi's stance right now on the euro? Give me some levels.
Well, I think we could see a test well below 140, and the risk is for a deeper correction at this stage. I think the euro faces really several problems right now. The first is there is concern over whether or not policymakers will successfully implement their previous agreements. The second is there remains some underlying concern on progress towards implementing fiscal austerity. And finally, economic data flow has been much weaker recently. We've seen a sharp deterioration in terms of the economic numbers, and I think that presents a rather difficult environment.
Okay, well, Todd, you said significantly under 140. Is that what I heard? We're already at 140. So how much lower can the euro go against the USD?
Short term, we'd be looking for a move towards 137.50.
Okay, well, it's not too much, shall we say. What does Citi think about double dip right now, considering we had basically zero jobs growth in the U.S. On Friday?
We're going through a soft patch, and I think that the big concern is that there's less flexibility in terms of the potential policy response at this stage. Certainly, there is less scope for monetary easing. There is very little scope for fiscal easing at this stage, and I think that means that the slowing that we're seeing has the potential to be somewhat more serious than has been the case over the past several years, when any signs of economic weakness demanded a very quick response from policymakers.
Okay, so what does that mean for the dollar? Because some are expecting QE3. Is Citigroup expecting that? And considering that there is so much volatility in the markets, does that mean people are running to the safety of the U.S. dollar, the U.S. currency?
Certainly, we'll continue to see safe haven inflows into the dollar. As I said, I think that has potential to lend the dollar some support against currencies like the euro. But if we look at the range of currencies, I'd very much put the dollar at the bottom alongside the euro, alongside the Japanese yen. I think that the currencies that are best positioned moving forward are going to be the smaller currencies, the commodity producers like Australia, the Canadian dollar, as well as emerging markets, particularly Asian emerging markets. Tactically, again, we like being short the euro, short the dollar against these smaller currencies.